Hey everyone, welcome back to FluxFolio Finance Channel. Today, we're diving deep into the financial drama shaking up the US economy. Jerome Powell, the chair of the Federal Reserve, is in the hot seat. Why hasn't he cut interest rates despite pressure from President Trump? Are his actions politically driven? And the million-dollar question, can Trump actually fire him? Plus, we'll explore how the Fed's refusal to cut rates might spark an economic and financial crisis, the current bond situation that could turn into a bond crisis, and what this all means for the proposed Mar-a-Lago Accord. This is a story that's got everyone talking, so let's break it down. If you're new here, hit that subscribe button. We're on our way to 1 million views, and we need you. Let's get started. First, let's talk about who Jerome Powell is and why he's such a big deal. Powell has been the chair of the Federal Reserve since 2018, appointed by Trump during his first term. The Fed is the US central bank, and it controls monetary policy, like setting interest rates. Right now, the Fed's benchmark rate is sitting at 4.25% to 4.5%, a level it's held since December last year. That's a problem for Trump, who's been pushing hard for lower rates to boost the economy, especially with his new tariff policies causing market chaos. So why hasn't Powell cut rates? Well, it's all about inflation. Powell has been warning that Trump's tariffs, like the 145% tariffs on Chinese goods, are driving up prices. In a speech at the Economic Club of Chicago on April 16, 2025, he said these tariffs could lead to a challenging scenario with higher inflation and slower growth. Inflation is already above the Fed's 2% target, sitting at 2.8% by the end of 2025, according to Fed projections. Cutting rates now could make inflation worse by encouraging more spending. Powell's stance is clear: he's not in a hurry to act until he sees how Trump's policies play out. He said the Fed is focused on separating the signal from the noise, basically, waiting for clarity. But here's the scary part: what if Powell's inaction triggers a bigger problem? Some experts and posts on X are warning that the Fed's refusal to cut rates could spark an economic and financial crisis. With $7 trillion in US debt needing to be refinanced at these high rates, the pressure is on. High interest rates make borrowing more expensive for businesses and consumers, which could slow down the economy even more. If businesses can't grow and consumers stop spending, we could be looking at a full-blown recession. And it gets worse: the bond market is already showing signs of stress. In April 2025, bond prices slid and yields on 2-year Treasury notes spiked by 0.3 percentage points, the biggest intraday move since 2009. This kind of turmoil signals a potential bond crisis, where investors dump bonds, driving yields up and putting massive strain on the federal budget. The US spent over $1 trillion in 2024 just to service its debt. Higher yields could make that number skyrocket, risking a financial crisis. Now, let's connect this to the Mar-a-Lago Accord, a plan proposed by Trump's economic advisor Stephen Miron to weaken the dollar and restructure US debt by converting foreign-held treasuries into ultra-long 100-year bonds. The idea is to reduce America's debt burden and boost manufacturing by making exports cheaper. But here's the problem: the Fed not cutting rates and the potential bond crisis could derail this plan. A weaker dollar might fuel inflation, which Powell is already worried about, making the Fed even less likely to cut rates. Plus, if bond yields keep rising due to market panic, foreign investors might not want to swap their treasuries for century bonds, they'd see it as too risky. Some experts warn this could even look like a stealth default, shaking confidence in US debt and sending yields even higher. On top of that, China and other nations might push back hard, especially if they feel coerced, which could lead to diplomatic fallout and market volatility. The Mar-a-Lago Accord relies on global cooperation, but a bond crisis and economic slowdown could make that cooperation impossible. Alright, the big question: can Trump actually fire Jerome Powell? Trump sure thinks so. On April 17, 2025, he said, "If I want him out, he'll be out of there real fast, believe me." He's even reportedly discussed firing Powell with advisors like former Fed Governor Kevin Warsh. But here's the catch: it's not that simple. The Federal Reserve Act says the Fed chair can only be removed for cause, like misconduct, not policy disagreements. Powell has made it clear he won't resign if asked, saying in November 2024, "No," when asked if he'd step down. He's also said it's not permitted under law for the president to fire him without cause. Legally, this is a gray area. No president has ever fired a Fed chair, so it's untested in court. Some experts, like those at Brookings, say Powell could sue if Trump tried to remove him, and he'd likely have a strong case since he has a clear interest in keeping his job. There's a Supreme Court case pending that might set a precedent, Trump v. United States, which could argue the president has broad removal powers. But past rulings have carved out a special historical status for the Fed, protecting its independence. Even Trump's own Treasury Secretary, Scott Bessent, has reportedly warned against firing Powell, saying it could destabilize markets. Economists agree, meddling with the Fed could lead to a stagflationary shock, with higher inflation and market chaos. So, what's the takeaway? Powell isn't cutting rates because he's worried about inflation, not because he's out to get Trump. His actions seem driven by data, not politics, despite what Trump claims. But this inaction could lead to an economic and financial crisis, with the bond market already on edge. This puts the Mar-a-Lago Accord at serious risk, as higher yields and global resistance could make the plan unworkable. And while Trump might want to fire Powell, it's legally complicated and could backfire big time. Powell's term as chair ends in May 2026, so he might just outlast this drama, unless Trump pushes the issue to the courts. What do you think? Is Powell doing the right thing by holding rates steady, or should he listen to Trump and cut them? Do you think the Fed's inaction could really cause a crisis, and what does that mean for plans like the Mar-a-Lago Accord? Drop your thoughts in the comments below. We're aiming for 1 million views, so share this video with your friends. Don't forget to like, subscribe, and hit that notification bell for more deep dives into the biggest stories in finance. Until next time, stay curious, and I'll see you in the next video.